To see you again, Austin. Thanks for the time. You know, it's lovely to be here. It's kind of been a crazy, spring, summer, but it's good to get back together and talk a little bit about real estate investing.
Yeah, absolutely. I think it's great that we're back together, and when things are up and down, you just got to keep steady, and this is something that we enjoy doing. So,
yeah, very true.
I'm very happy to be here.
Very true. So the last time we chatted, you were talking about being a residential real estate investor, but what I remember the most was you were talking about having a plan for your residential A, investing, and B, long-term strategies. Share a little bit more about it. It's been a crazy market. What's been going on? How are the plans working?
Yeah, so obviously I'm a residential real estate agent, so really this plan came from working with residential buyers and sellers, but mostly buyers. I work a lot with first-time home buyers, so they really don't know much about the market, buying a home, what it takes. Mm-hmm. So by creating this plan, I've been able to help walk many families through the process of purchasing real estate, and that's translated into investing. I think having a real estate plan for investing, especially in residential, is lucrative. Residential real estate gives you flexibility through all portions of the real estate investing journey, the entry or the buy, the hold, and then your exit as well. So with all of that flexibility and all of the options, it's really easy to get taken off course. So by having that plan and by setting a plan from the start, real estate investors, especially in residential, are able to see a lot larger profits.
Right. Well, you also talked a little bit about, from the planning standpoint, of thinking about how to use your asset, your resource, as part of your plan. What have you been telling people about that, given what's going on in the marketplace today?
Yeah, so obviously interest rates have been rising pretty rapidly.
Sure.
So a lot of people are holding on to these assets or their homes that they may live in, and they have 3-4% interest rate, but they can't liquidate because they can't buy anything for that 3 or 4% interest rate.
Right.
But they're thinking as a retail buyer. When they start to shift their thinking to being an investor, what they see is they're holding on to this asset with a very low monthly payment relative to value or to what the rent may be giving them. So they could be cash flowing on the home that they actually live in now. So by converting that asset from their own personal living to now an investment property, they're actually able to start the journey maybe a little bit quicker. Usually you're going to have to put 20%, 25, 30% down on an investment property, and they got into this house for 5%. So they may already be ahead of the ball. So by using that home conversion, they can switch from their mindset of this is where I live to, if they really want to start building wealth, they can start leaving what we call an investment trail by buying residential homes and renting it out behind
them. I got it. So an investment trail. So would that mean maybe taking that home and using that as a rental and buying something else and using the equity out of it? Or would that mean sharing it? How do you see that working for them?
Yeah, it really depends on the situation of the homeowner or the person controlling the asset there. It may look like if they need to downsize, but it's a very rentable home, maybe they downsize but still rent out that home, and they're cash flowing and it's paying for a portion of this home, offsetting our temporary interest rate hike, and then maybe they refinance this next home when interest rates go down, if they go down. And but other people may do what we call house hacking. They may rent out 1-2 rooms to help offset their current mortgage payment, and they may not see a cash flow from that, but they're getting equity in the debt pay down of their current note.
Right.
So there's just so many options for these homeowners that already own a home. They feel like they're stuck, but really if they shift the mindset with the right plan, they can continue to build their portfolio.
That's great. It's funny, you mentioned the term house hack, and I shook my head. I had no idea what that meant. But you mentioned house hack also in the context of owning like duplexes and fourplexes, and those seem to be the natural progression from, gosh, I own a home and I want to expand from there, and maybe I don't want to rent my room out, but I can take some money out and go from there. Tell me what, I know you've had some success at that. Tell me how that's working and and why people are doing that.
Yeah, so people who own duplexes and fourplexes, they can buy it as an investor, and a lot of people do because they see the multi-unit. They think they have to have the full 25-30% down. Duplexes, quadplexes, triplexes, they may be a little more expensive, but what a lot of people don't know is actually you can get a residential loan on properties 1 to 4 units, and it's still residential if you're living in one of the units.
I see.
So what some of my clients have done, and people that I've sold other investors duplexes to, is they've lived in one unit while renting out the other units to help offset that note.
Sure.
Sometimes they cash flow from it, or they live there for free. Sometimes they still have a little bit of debt service to pay, but it's significantly accelerating their debt pay down, and they can do the same thing. They can buy that property, live in it, and then they can also move on from that property, rent out that unit they were doing, and do the same thing on another quadplex.
So it's just rinse and repeat, kind of. We do that, we maybe buy a duplex, live in one side, rent the other side, and then at some point maybe move out of that thing because I have enough equity and move to the next thing and the next thing. But again, that gets back to having a plan, right?
Exactly.
You know, so if somebody were thinking about that, what kinds of things can you help them do in developing that plan?
Yeah, well, like I mentioned, residential real estate has so much flexibility in the way you want to invest and the way you want to build wealth through real estate. I know you have your 3-act play: appreciation, cash flow, taxes. So one thing that I can do to help an investor when they come to me saying these are the assets I have, or these are the assets I want, is I sit down with them and walk through what they can do. Well, during the hold period of an investment property, there's so many options. You can Airbnb it. It can be a strict vacation rental. You can do a midterm rental, so travel nurses, businessmen going in and out of cities for just maybe a week, a month, whatever it may be. You can traditional rentals. There's so many options. So just really focusing on, okay, what's my niche play here, and what do I want to do, and what do I see the value in? Because if you don't see the value in it, chances are you're not going to be as happy with your investment, even if the returns are similar or a little bit higher.
Right.
You want to enjoy what you're doing as well. That's why we're in real estate. We enjoy it as well,
Right.
and we want investors to enjoy it. So I sit down with them, figure out what are you going to enjoy, and what niche can we really have you get educated about, so then we can move on to the next step.
That's great. Yeah, it's great. So one of the reasons why we're doing this is because you become one of the key players. You're one of the founding members of this little group we've put together called YPI, or Young Professional Investors. What attracted you to that whole thing? What attracted you to a group of folks that are talking about being young professional investors?
Yeah, I guess being a young professional myself, if I want to put that label on myself, I started in residential real estate wanting to invest in real estate myself, and I thought, what better way to do that than actually put my feet into the market and kind of see what's going on and be able to feel the market. And what I found is a lot of first-time home buyers are maybe young professionals or professionals looking to buy their first home. They're looking strictly at just living in that one home, and they don't realize the opportunity within real estate to build long-term wealth. They may be investing in their company 401k, they may be investing elsewhere, but they're really just thinking of a home as a home to live, when really with the proper planning, they can start building generational wealth just through real estate.
Right.
So we had a conversation quite a while ago and had a meeting of the minds that these young professionals really need to be educated and have a platform where they can learn and network with like-minded individuals to build wealth, because like we know, now is forever.
Right,
And
right. That's true.
So just having a passion for individuals, just building the life that they want, and knowing that it starts when you're younger, and it's never too late, but sometimes it can make it feel too late, and we just don't want people to get there.
Well, you're a great addition to the YPI group. We thank you for your efforts. And so those that want to work on their residential side and the residential development should certainly get in contact with you, Austin. I appreciate your time today. Thanks for being here. Thanks for being part of the group, and thanks for being an inspiration to me.
Yeah.
Thank you.
Thank you, Bruce. Appreciate it.